We'll begin by setting up your income. This only takes a few minutes, and once it's finished, many of the financial summaries throughout the planner will begin updating automatically. To add your first income source, click Add Income Source. Enter the name of your income source. For example, you might enter your employer's name, pension, disability benefits, self-employment, or any other source of income you receive. Next, enter the amount you expect to receive for the month. This allows you to compare what you planned with what you actually received during the month. If you receive this income more than once each month, you can add multiple paydays. For example, if you're paid every second Friday or twice a month, simply add each payday separately so the planner knows when your income is expected. As you enter those paydays, you'll notice your monthly money calendar updating automatically. For example, if your expected monthly income is $1,000 and you've entered 4 paydays, you don't have to calculate each paycheck yourself. Simply hover over any payday, and the planner will show you how that $1,000 has been divided across the 4 payments. Every payday you enter is automatically added to the calendar, giving you a clear visual picture of when your income is expected throughout the month. You never need to enter anything directly into this calendar. As you add or update income sources and paydays, it updates automatically. This calendar doesn't just display your income. It also shows your bill due dates and today's date, giving you a quick snapshot of your financial month in one place. You'll notice this throughout the planner. Instead of asking you to enter the same information over and over, you enter it once, and the planner automatically updates every section that uses that information. Now let's return to the income breakdown. By default, every new income source is set to recurring. This means you only need to enter the income name and expected monthly amount once. When a new month begins, the planner automatically carries that information forward, saving you time. For example, if you're paid by the same employer every month, you won't need to recreate that income source each month. The planner will automatically include it for you. As you can see, when we move to the next month, the income source has already been carried forward automatically. If your expected income changes at any time, for example, you receive a raise, your hours change, or your pension amount is adjusted, you can simply update the expected amount for that month. The planner is designed to be flexible, so you can make changes whenever they're needed. If you have a one-time payment instead, simply turn recurring off, and that income will only appear in the current month. After you've finished entering this income source, simply repeat these same steps for any additional income you receive. As you add your income, your totals will update automatically. This information is now being used throughout the planner, so you won't have to enter it again elsewhere. If you need to delete an income source, simply click the X on the right. If you'd like to rearrange your income sources, hover over the left side until the drag handle appears, then drag and drop them into the order that works best for you. That's it for income. You've now told the planner how much money is coming in and when to expect it. Everything else that depends on your income will now update automatically as we continue setting up the planner. One last reminder, as each payday arrives, take a moment to enter the amount you actually received. For example, if you receive $500 on your first payday, simply enter $500. If your next payday is another $500, just enter plus $500 in that payday's box. The planner automatically keeps a running total for you, so there's no need to calculate anything yourself. Keeping your actual income up to date only takes a few seconds and ensures your cash flow, financial summaries, and reports always reflect your real financial picture.